And the recording goes on. Welcome everyone. This will be today's what day is it? 6th of March backtesting session. So once again, welcome everyone. As usual, I will just generate a random number. And let's start with February. So random number generator. We'll backtest today from February. One. Okay, perfect. We're going to backtest the 1st of February. So let me just check. Where's 1st of February? Somewhere around here. Replay 3rd, 2nd, 1st of February. Yeah, this is 1st of February. Perfect. New York Open is right here. I'm going to go to the 15-minute chart and adjust everything. Sorry, guys. I'm reading the chat and setting everything up. So 1st of February, perfect. Okay, 15 minutes before the session starts. Okay, let's start the analysis on the 4-hour chart. Can we just start the session? You all set? All good? Can we start the session? You ready?
Yeah.
Okay, perfect. So let's go for it. Okay, what can we see on the 4-hour chart? We've talked about this range several times in the previous sessions, previous recap videos, markups in every single content. So we had a pretty clear 4-hour range right here, equal highs, equal bottoms, and all of these equal highs and bottoms have been taken out here and here on both sides, as you can see. Okay, so the overall bias, the overall trend in this region and on the overall higher time frame region is still extremely bearish, right? So as you can see, it's still creating series of higher highs, higher lows. I mean, lower lows, lower highs, lower highs, lower lows, creating a bearish trend over and over again. And basically, if you can check this, our pattern is ranges, sweep of the ranges with slow movements to the upside, react on some supply zones, huge inefficient movements to the downside, ranges, slow movements to the upside, sweep the liquidity, react on supply zones, downside movements, ranges, slow movements to the upside, sweep the liquidity, reaction on supply zone, downside inefficient movements. So basically, this is our pattern in this region on the 4-hour chart. We are on the 4-hour chart still. Let me just remove this from the way so you'll be able to see. Okay. So let me just mark out the range with these bugs. As you can see, perfect equal taps on the upside. First tap, second tap, third tap, fourth tap. So basically 4 equal taps on the tap side. And on the downside, we have a trend line liquidity. As you can see, perfect trend line liquidity touches with trillions and trillions of dollars sitting just above this line. Okay. What else can we see? We can see that price has swept the liquidity to the upside, swept the overall 4-hour range to the upside with this inefficient movement. Basically, the inefficient movement has started from this candle right here, this weak demand zone. We'll just talk about this later. So let me just focus on this region first. As you can see, price is reacting on some sort of supply zone in this region. This was the extreme supply zone. Price has actually broke above this supply zone and swept some more liquidity from this region and created more liquidity, as you can see. And we will just put a horizontal line right here. And you can see that price swept the liquidity from above this supply zone, swept all of the equal taps, maybe on the 15-minute, maybe the 1-minute or some minute chart, and tapped into another sort of supply zone right here, reacting on that supply zone. And let me just zoom in. So after the supply reaction and after the supply tap, as you can see, we had this less recent demand zone right here. This was our less recent demand zone that has caused the less inefficient push and break of structure to the upside. This was the less structural low point, inefficient push to the upside. From this demand zone, let me just mark it out. From this 4-hour demand zone, price has actually swept the liquidity to the upside. This overall range liquidity, as you can see, swept all of the liquidity, broke structure to the upside, caused inefficient push, built up liquidity. So this is our pretty valid demand zone. This is our first extreme demand zone, and this is our second decisional demand zone. And the second decisional demand zone has been broken by this candle, as you can see. Actually, this is a flip zone. Price created an inefficient push to the upside, break of structure here, and sweep of liquidity in this region. Yes, sweep of liquidity in this region, inefficient push. And after this, price is reacting on this demand zone, reacting on this 4-hour demand zone, but this demand zone actually couldn't give enough power, couldn't print a new high after the tap of this demand zone. As you can see, price couldn't print a new high here. It was just a weak break. It's just a weak break of the week, so it doesn't count as a break of structure. We have to wait, or we had to wait for a break of structure with body closure, as you may know. So what else can we see here? prices reacted on this demand zone, and after the reaction on the demand zone and fail print of the new high, price actually broke below this demand zone with this huge inefficient movement. So this means we will have an extreme supply zone up here, which is this candle, because the inefficient push has started from this candle, the overall break and the flip zone has started from this candle. So this is our right flip zone. This is our extreme flip zone in this region, but as you can see, price is actually pretty far away from this supply zone, so this won't be relevant for us today. Okay, what else can we see? We can see that price is reacting on this second demand zone right here with this candle. So basically this 4-hour candle on the 50-minute or 1-hour chart will look like this. As you can see, it's coming down, reacts on the demand zone, creates a pullback, and from this pullback, the new candle opens, this candle opens, creates a pullback, prints a pullback, and after the pullback, it just breaks below the demand zone. So basically the 50-minute or the 1-hour movement looks like this. This candle will look like this on the 50-minute or 1 hour. Okay, so basically this means we have a new flip zone. On the 50-minute or 1-hour chart, it will be much easier to find that supply zone, because in this region, basically we can call that this is the whole supply zone. Ultimately, this is the whole supply zone. But yeah, on the 50-minute chart, we'll be able to find a good refinement for this supply zone. Let me just switch to the 15-minute chart first and just quickly refine this zone. So if you take a closer look, this was the less recent demand zone, and the overall flip of this zone has happened from either of this candle or either of this candle. Basically, this was a reaction right here. Price is reacting on this. As I told you, this is the reaction on the 15-minute chart. This is how it looks like on the 15-minute chart, top of the demand, pullback, break. So the overall reaction has happened here, and the extreme of the order flow that was leading to a break of this demand zone and break of structure to the downside was this candle. But the real break, ultimately the real break, has started from this candle, right? But I would choose this candle, this upper candle in this case, because the clear inefficient push and the overall order flow that was leading to a break of this demand zone has started from this supply zone. So this is our 15-minute refinement. Let's just switch back to the 4-hour chart and talk about the 4-hour chart. Okay, so what else can we see? We have an extreme flip zone, which is this one. We have a decisional flip zone, which is this one. And after the decisional flip zone was printed right here, a bearish order flow was started, as you can see. So ultimately, as you can see, prices are reacting on this 4-hour supply zone, the overall 4-hour supply zone. There was a supply reaction, and from this 4-hour supply reaction, price created a break of structure here to the downside with inefficient movement, as you can see, and body closure. So basically, this is a pretty valid 4-hour break of structure and bearish continuation order flow, because as you can see, new break of structures were printed here: inefficient movement, supply reaction, break of structure, inefficient movement, supply reaction, break of structure, inefficient movement. So this is a liquidity trend line, and I mean supply chain built up for the decisional or extreme supply zone right here. Okay, what else can we see? We can see that prices created this huge inefficient movement to the downside from this candle, right? But actually, it wasn't happening from this candle. This whole inefficient movement. Let me just ask you, which candle is the right one in this case? Which candle is the right one in this case? This upside candle or the wick of this candle? Which one is the right supply zone in this case?
The wick.
And why is it a wick?
The inefficient push started from the wick.
And
Yes,
it's already
you're perfectly right.
indicated this.
Yeah. Why am I saying
bearish,
that?
the bearish candle already been mitigated.
Exactly. That's the answer I was looking for. Basically, there can be orders. There can be more orders sitting on this candle, this upside candle, because all of the orders were taken out by the following candle, right? Because the opening of this candle and the high of this candle is basically higher than the closure of this candle. So as you can see, this is the upside candle, and the wick of this candle, the following bearish candle, is higher than the closure of this candle. So basically, there can be orders sitting on this upside candle, because all of the orders has been order mitigated by the following candles wick. So all of the new orders, all of the new stop losses, all of the new orders are sitting on this candle right here. So this is our less supply zone in this region, because as you can see, all of the price action between this region, between the supply zone and between this has been mitigated. All of this price action has been mitigated. All of the inefficiency has been filled up. We got small inefficiency right here that needs to be filled up, but price is on the way up to react on this supply zone. So what can we expect from the higher time frame? What can we expect from the higher time frame 4-hour chart? And what could be your expectations on the long term? Let me just talk through this. Let's check if there was actually a demand reaction. I always check this if there was a demand reaction or price just reversed in the middle of nowhere, because as you can see, if I scroll back to this region, I believe there will be a good, there's a good demand zone. Here's this perfect weak demand zone again that price was reacting on. So basically price was reacting on this weak demand zone, and this demand zone could reverse price. And from this reversal, price will be able to generate enough fuel, generate enough liquidity sweep and supply tap to continue the overall bearish order flow in this region. Because as you can see, price swept the upside liquidity here, swept the downside liquidity here. This was a range. All of the ranges are being swept no matter what. All of the ranges will be swept sooner or later, right? So the upside range has been swept, the downside range has been swept. Price tapped into some sort of demand zone right here. This was the demand tap. Price was reacting on this demand tap. I believe there will be a 15-minute change of character. Of course, there will be a 15-minute change of character at this region. Price change character here, switch the overall order flow from bearish to bullish in this region, and it's on the way up to tap this supply zone. And the reason I always check if there's any demand reaction before the reversal, I mean after the reversal, is that if price reverses in the middle of nowhere. So let's say there wasn't any demand reaction and price just reversed in the middle of nowhere. This week, I mean, this low will be weak. This low will be 100% weak, and price will break below this low. But if price is coming from an unmitigated demand zone, just like this 4-hour zone, it has a higher chance to just break through supply zones and react on higher supply areas, for example, like the extreme or this decisional. But if price just reverses in the middle of nowhere without the demand tap, it will just react on the first supply zone. So it will just react on the first supply zone, for example, this one, and continue the overall bearish order flow, because price just reversed in the middle of nowhere because it was running out of fuel and it needs to collect more fuel in a form of inefficiency, in a form of a supply zone, in a form of a liquidity sweep. So yeah, price was coming from an unmitigated demand zone at this region, as you can see. Okay, so what can we expect from the 4-hour chart? We can expect from the 4-hour chart that price will tap this supply zone up here, price will react on this supply zone. And what else do we need inside of this 4-hour supply zone? What are we waiting for inside of this 4-hour supply zone? I'm asking you guys.
A 15-minute chalk.
Exactly. Why are we waiting for a 15-minute chalk?
Oh, because if this is a 4-hour zone, then we need a 15-minute chalk, and if it is a 15-minute zone, then we need M1 chalk, right?
Exactly, man. Exactly. Good job. Yeah. So once again, because I'm getting this question every single day, basically every single day, you're asking me this question. Hey, Flip, inside of a 4-hour zone, you have to wait for a 15-minute change of character, right? Right. I'm going to write it down here. I'm going to write it down here with text. 4-hour zone, 15-minute chalk, 15-minute zone, 1 minute chalk. And one more important rule about this 4-hour 15-minute chalk. If the 4-hour zone has been refined on the 15-minute, so basically you refine this zone, refine this 4-hour zone on the 15-minute chart, you still have to count that 15-minute zone, that refined 15-minute zone, as a 4-hour zone, because that refined 15-minute zone will still be a 4-hour zone, and you have to treat that 15-minute zone just like a 4-hour zone. So you will need a 15-minute change of character inside of that 15-minute refined supply zone. Okay, just memorize this. 4-hour zone, 15-minute change of character. 15-minute zone, 1 minute change of character. 4-hour refined to 15-minute zone, 15-minute change of character. I will just write it down here again. 15-minute refined from 4-hour, 15-minute check. This is a really, really important rule, because basically I'm getting this question every single day. You're asking me this question every single day. Just memorize this, just screenshot this, just save this image and memorize it. 4-hour zone, 15-minute check. 15-minute zone, 1 minute check. 15-minute refined, 15-minute check. This is a golden rule. Okay, let's just move on. So basically we are expecting a reaction on this supply zone, and to execute a short trade on this supply zone, to execute a short trade after a reaction on this supply zone, we will need a 15-minute change of character on this supply zone. So basically we will need 15-minute change of character. This will be the 15-minute structure. We'll need to see something like this, 15-minute change of character and 15-minute zone reaction. And after the 15-minute zone reaction, the 15-minute zone creation, we will need to see a 1 minute change of character after the reaction on this 15-minute zone. So this is the 15-minute zone right here that was leading to a change of character on the 15-minute chart. And after the reaction on this 50-minute zone, we will needed a 1 minute change of character. Of course, some of you guys already know this rule. Some of you guys have heard this rule 100, 1,000 times, right? But you have to memorize this because you're still making this mistake. You're still making this mistake every single day because I'm seeing you guys. I'm seeing how you're trading, what trades are sending in the live trading group, and you're still making these mistakes. You're still making a 1 minute change of character inside of a 4-hour zone, and you can make that. You have to memorize this. And I know you've heard it 1,000 times, right? But I'm going to tell you 1,001 more time because you have to memorize this. If price reacts in a 4-hour zone, 15-minute change of character, tap of this 15-minute zone, and after a tap of this zone, you'll need to wait for a 1 minute change of character too. And after the 1 minute change of character has happened, you can enter in a short trade. And only in this scenario you can enter in a short trade. Because without a double confirmation, without a 15-minute change of character and a 1 minute change of character, you can't just enter in a short trade inside of a 4-hour zone. Okay? Just memorize this. This is really, 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 really important. And you're still making this mistake. So let's just move on with the backtesting. Okay, if we've analyzed the 4-hour chart, let's just switch to the 15-minute chart. What can we see on the 15-minute chart? We can see that price is reacting on this 4-hour zone right here. And after a reaction on this 4-hour zone, price has changed character on the 15-minute chart here, as you can see. This was the last structural break to the downside here with inversion movement. And after a reaction on this demand zone, price has changed character here to the upside and started the bullish order flow, printing series of higher highs and higher lows. As you can see, higher highs, high lows, higher highs, higher lows, higher highs, higher lows. So on the 15-minute chart, our structure is bullish in this case, but the overall trend, the overall bias is still extremely bearish. The overall bias is still extremely bearish. Every single short opportunity will be a pro trend opportunity. Every single long opportunity will be a counter trend opportunity. So what else can we see? We can see the price is reacting on this, created a change of character and built up liquidity trend line for the upcoming shorts, as you can see. Basically, this is a liquidity trend line with perfect touches. First touch, second, third, fourth touch. Perfect liquidity trend line built up for the upcoming shorts from this supply zone. Right? 3 ounce and 3 ounce of dollars are sitting just below this zone, built up for the supply tap and short continuations. Okay, what else can we see? We have to focus on the last recent leg because we'll be trading the 1st of February. So we only care about the last recent leg. We have identified the trend, which is bullish on the 15-minute chart, bearish on the overall higher time frames. So what else can we see on the 15-minute chart? We can see that price has created a liquidity right here. First tap, second tap, price has swept this liquidity with this inefficient movement to the upside and actually created a break of structure. And this is a break of structure line right here. Why am I saying that this is a break of structure line and not this is the break of structure line? Can you tell me why I'm saying this? Why is this a break of structure and not this a break of structure?
Because that was only wick. That was a sweep, not a structure break. But the next candle closed above it, so it's a break, right?
That's also right. That's also right. But I was pointing out to something else. And yeah, Gabor, that's the last recent high, but put the low. Exactly. This was the last recent high that was created the last recent low. So basically the structure in this region is this is the high point and this is the low point. Less low point, less high point. Everything between this high point and this low point will be just substructure. So every single break of structure will be a substructural break in this region because this was the less structural high, less structural low. If this high breaks, that will be a break of structure to the upside. If this low breaks, that will be a change of character to the downside. So this low couldn't print a new high, as you can see. This wasn't a break of structure. This high couldn't print a new low. So basically, the real break of structure has happened here. Okay, let's just find the origin of the break of structure and the origin of the inefficiency. And that will be this candle right here. This demand zone, as you can see, this doji candle created the inversion push to the upside, created the liquidity sweep, created the break of structure, everything. Because between this candle and this candle, there's already inefficiency. And the real inefficiency has started here, as you can see, but the inefficiency has been already filled up right here. So there's no inefficiency left. The only inefficiency is here between this candle and this candle. So the real inefficiency is here. Okay, what else can we see? We can see that price has created a 50-minute range in this region because equal tops, equal bottoms, or repeated trend line. This is a range again on the 15-minute chart. What do we know about ranges? I'm asking you again, what do we know about ranges?
That it will be swept.
Yes, every single range will be swept sooner or later. No matter what, the ranges will be swept sooner or later. So what can we expect from this price action? We can see that the upside range has been swept already. We can see that we have a demand zone right here with liquidity above it. Inefficiency needs to be filled up. And basically prices change character here to the downside, because this was the less recent 50-minute zone, 50-minute demand zone that has pushed price to new highs. As you can see, this is the break of structure, sweep of the range, and price has actually weak below this demand zone, but did not sweep the liquidity yet. So this means we have a change of character here, because if there was no liquidity sweep, we can assume that this was a break. This was a change of character of this zone and the overall 50-minute time frame. So what can we wait? What are we waiting for here? I'm just asking you again, what are we waiting for? This is a clear plan. Yeah.
Sweep of the liquidity and tap into the demand, and 1 minute change of character there.
Exactly, that's a perfect plan. You always have to make, okay, guys, this is a really, really important rule. You always have to make your plan before you start trading in a session. So basically just look at the 15-minute chart before you start to trade in every single session. Look at the 15-minute chart and build a plan for yourself. Build a narrative about price, about what will price do. So I'm just building a narrative. I'm building that narrative that price will sweep this downside liquidity, or before the liquidity sweep, it will just reverse, react on some sort of supply zone here, maybe this wick right here or the extreme right here, react on the supply zone, and after a supply reaction, it can sweep the liquidity and tap into this demand zone. So you always have to build a narrative, because without a narrative, without a plan, you'll be lost and you'll be just blindly executing trades on the specific session, right? So just build a narrative. We know that the higher time frame structure is bearish, printing series of lower lows and lower highs. We know that the 15-minute structure is bullish in this region and it's heading up to this supply zone. But we also know that there was a range, and this range high has been already swept. The range low is waiting to be swept, and this demand zone is waiting to be tapped because there's inefficiency, there's liquidity, and the clear break of structure here. So I'm building a narrative that price will sweep the liquidity, tap into this demand zone, and change character here on the 1-minute chart. And after that, we can continue the expectation order flow riding to the upper supply zone. So basically, this is our narrative. This is our plan for today. You always have to make this before every single session, because you have to build a plan. You have to build a plan for every single day, because without a plan, you'll be lost, right? Now I got the plan. Now I got the narrative. I know what I'm expecting for. And if price creates something completely different in this session, I would just change my narrative. I would just reanalyze and change my narrative into something else. But right now, this is our narrative, right? Okay, let me switch to the 5-minute chart. Now let's see if we can refine this zone. Actually, we can perfectly refine this zone, as you can see, but it doesn't really matter because it has been already broken in the 5-minute with the body closure, 15-minute foot closure. So basically, this is a change of character to the downside. Here's a change of character to the downside of the 15-minute chart, and here's a change of character to the downside on the 5-minute chart. And actually, we have a flip zone also here, because as you can see, we have a demand zone right here. This was the last recent downside candle before the break of structure to the upside. And this was a flip zone. Price was reacting on this zone, as you can see, couldn't break below it, and reacting on it several times, created a pullback from this candle. And from this week, price is actually broke below this demand zone. So we will have a 5-minute flip zone in this region. This supply zone caused the overall flip of the demand zone and the break of this structural low point or demand zone right here. So we have a pretty well supply zone right here, but we also have an extreme one in this highs. But this extreme one actually did nothing. It was just causing the order flow that was reacting on demand zone, but the overall break of the demand zone and the overall flip has started from this candle. So basically, this will be worthless for us. Okay, what did I do? Okay, let me just change back the color. Perfect. So as you can see, here's perfectly fit trend line, built up for this zone. This is a fucking good confidence, right? Sorry for my language. Okay, so we've analyzed every single time frame. We've built a narrative so we can start to trade. But before we start to trade, one more thing. What else do we need to do? I'm asking you. News. Perfect. Thank you. Thank you, Diego. We have to check the news, because before every single backtesting session, you still have to check the news, because maybe on that day there was a high impact news, and you have to check that if there was any high impact news. Which day is it? 1st of February. Yeah, 1st of February. So 1st of February on this week, let's see if there was any high impact news on the 1st of February. Okay, as you can see at the opening, there wasn't even a single high impact news. The first high impact new that hit in 2 hours into the session. So there was 2 high impact news on the 1st of February at 4 p.m. in my time zone. So we'll take care of that 4 p.m. time zone, and we won't open a trade at that 4 p.m. time zone, right? Okay, now that we check the news, we can start to trade. I can start to forward play price. But one more thing, we have to check the lunchtime zones and mark up our favorite zone, which is the lunchtime rape zone, right? Sorry, I can't use rape anymore. Sorry, I'm not using it. So we have to check the lunchtime zone. As you can see, every single zone inside of this time window, every single zone inside of this green time window will be fake. Every single zone, every single 1 minute, 5 minute zone inside of the time window, 1 hour time window is fake. So what confluences can we make? We can't rely on this supply zone that was leading to a change of character. We have to find something else for this supply zone, because this supply zone will be swept. Okay, what else can we see here? We can see that we have liquidity. We have perfect liquidity here, as you can see. This is liquidity is leading up to the supply zone here that was leading to a change of character actually in the 1 minute chart. So basically, this is a perfect setup, perfect 1 minute supply zone with liquidity below it, lunchtime zone below it. This zone will be swept, this liquidity will be swept, this zone will be tapped. And as you can see, this zone is outside of the lunchtime zone. So we can rely on this zone. And if I analyze the 1 minute chart, as you can see, the overall flip of the 5 minute zone, this was the 5 minute zone. The overall flip of the 5 minute zone has started from this candle with inefficient push, perfect liquidity built up for this zone. And yeah, basically this is a perfect zone. Okay, let me just delete the lunchtime fake out zone and start this session. Perfect session will open in 1 minute. Perfect. Just play price forward. As you can see, this was the 15-minute break of demand zone. So we have to see what happens. We need to see a clear movement. Okay, reaction on some sort of supply zone. We need to see okay. Here's liquidity, as you can see. Here's perfect liquidity line built up, and basically this is liquidity too. This is a liquidity trend line built up for the lunchtime zone or the extreme zone. All of these movements, all of these supply zones, all of these candles will be liquidated. These will be liquidated because every single candle inside of this time window will be liquidated. Okay, so there's liquidity too. There's liquidity too. What confluences can we make? We can make that the price will split downside liquidity, sweep some liquidity from this region. And after a liquidity sweep, we can expect a reversal and ride the expectation long order flow up to this supply zone. Sorry, up to this supply zone. This is our 1 minute plan. We are waiting for this. As you can see, here's break of structure to the downside at this line, but we can't open a position on this zone because this is not part of the lunchtime, but this zone has liquidity just above it. As you can see, perfect liquidity line just above it, perfect liquidity trend line just above it. So basically this will be liquidity too. Okay, let me just play price forward again. Liquidity is being built up for that zone actually. And we just mark it out. Would you risk this setup, guys? Would you open a position on this supply zone? Would you risk this? Because liquidity is being formed actually here. No? No. Feel free to use your microphones, guys. Don't be shy. Okay. I'm saying we won't risk this setup because there's a bunch of liquidity sitting just above this supply zone. So we just leave it. We're going to skip this. We are waiting for a clear sweep to the downside. On the 15-minute chart, we'll see a 15-minute sweep week. And after a reversal, we'll be looking for long opportunities. That's our master plan right here. That's our master plan on the 1 minute chart. Let's see what else happens. More liquidity sweep. Okay, price did not tap this zone as you can see, but swept the liquidity to the upside. This was a liquidity price. This was a liquidity price swept this liquidity with this liquidity sweeping week because this is a liquidity sweeping week. Okay, this supply was not tapped. Building liquidity to the downside. So basically there's more liquidity is being built up as you can see in this region. This is liquidity. This will be taken out for sure. I'm basically 100% sure that this liquidity will be taken out. Okay, there's the sweep. Perfect. It has been taken out. Okay. Okay. And let me just switch to the 15-minute chart. If that was a liquidity sweeping week, yes, that was a perfect liquidity sweeping week as you can see on the 15-minute chart. Here's liquidity. This is liquidity, and this was a 15-minute liquidity sweeping week. So this wasn't a this wick didn't sweep the whole liquidity to the downside. It just created more liquidity, but swept some liquidity. So what can we make with this info? We can assume that price will reverse to the upside, create a bullish structure to the upside after a liquidity sweep, react on some sort of supply, maybe on this supply zone, react on this supply zone, create a change of character, and expectation order flow to the downside, continuation of the order flow to the downside, tap of this demand zone, and sweep of the other liquidity, because this liquidity sweeping week actually created more liquidity. Just imagine how many orders were placed on this week, on the end of this week. Just, only BFIs could do this movement, because swept liquidity, trillions and trillions of orders have been placed here on the 50-minute chart, because if a week looks like this, there needs to be trillions and trillions of dollars to create a week like this actually, and create a candle like this. Trillions and trillions of orders have been placed here, and the price is reversed. Liquidity sweep to the downside, orders have been created, upside movement, V-shape recovery, and after this, price will be able to sweep the downside liquidity again and collect all of these trillions and trillions of dollars in orders. Okay, so our master plan right here is actually waiting for a change of character on the 1-minute chart, which has actually happened. We just mark this demand zone out. And if price creates a liquidity for this zone, I will be executing this trade regardless. Because, sorry, I didn't say this demand zone actually broke above this supply zone and changed character on several places, changed character here, 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 here. So in several places, right? This is a pretty valid demand zone that has started a huge inefficiency to the upside. Okay, let me just play price forward. Okay, there's a liquid. Okay, that's perfect liquidity. Perfect. Here's double bottoms, as you can see. I'm going to set an order limit on this candle on the 50% of this candle. Why are we using the 50% entry right here in this region? Can you just tell me? Someone?
The wick is bigger than the body of the candle, and you have to reduce your stop loss.
Exactly. Thank you for the answer. It's perfect. So I'm going to set an order limit on the 50% of this candle. Let's see if it covers the whole zone. Yeah, the 2 pips stop loss perfectly covers this zone, and I'll be targeting this upper zone because this zone will be liquidated. As you know, this is the lunchtime zone. I can actually refine this zone on the 5-minute chart from the 5-minute chart to the 1-minute chart. So this zone will be liquidated. I'm 100% sure. We are waiting for the tap of this demand zone. Perfect change of character to the upside, perfect liquidity creation, perfect continuation. So this was the last demand zone that has caused the last break of structure to the upside and liquidity sweep here at this region. Just imagine how many people are going to place an order on this demand zone and how many people are going to be liquidated just because there's double bottoms. So can you open a position on this demand zone? Can you?
No.
Yes?
No.
Yes. And why can't you open a position
No.
on this demand zone?
Liquidity below for the liquidity.
They will be liquidated. Exactly. So we're waiting for the liquidation and the top of this zone. Okay, price has created upside liquidity. As you can see, here's perfect upside liquidity leading up to this zone. Okay, let's play price forward. Price is actually created liquidity for the downer area for this demand zone. Here's a liquidity again. So in this setup, in this kind of scenario, we can actually try to raise this. We can actually try to raise this setup, because if a liquidity is being swept, for example, this liquidity is being swept, the less recent demand zone in this case will be able to hold price, because if a liquidity sweep happens, just imagine the liquidity is being swept, price will react on this zone because there are more orders, liquidity is swept, more orders are triggered here, more stop losses are triggered here, more shorts are converted into longs at this point. Top of this zone, more orders are being placed because that's an order block. People are placing orders here. All of these converted orders, all of these orders collected from this region will be able to turn price to the upside. So in this region, I will try to risk an entry here because there is liquidity. There is liquidity. So I will just keep this downside order here, and I will execute a new order on this demand zone. Because if it, let me just adjust this stop loss, because if this demand zone can't hold price and it can reverse price to the upside, price will go down to liquidate this liquidity right here and tap into this block. And this will be a -1 risk reward ratio. We'll lose on this trade. But if this trade will be a lose, price will 100% reverse on this block and continue the overall order flow. So let's just try it. Okay, that's actually nothing. So I'm going to delete this. I'm in the downside order because price is too far away, and if price reverses, it will more likely continue the bearish order flow. So we are keeping this order until this supply zone is being tapped. And actually, in this kind of scenario, I will try to risk an entry on this block because price is actually close to this zone and liquidity is being built up here, liquidity is being built up here, liquidity is being built up here, everywhere. So basically everywhere is liquidity built up for the upcoming shorts. And combining this liquidity with this liquidity right here, this, I don't know how many taps are these, 1, 2, 3, 4, 5, with these 6 equal taps and this not lunchtime zone and this lunchtime zone, price will actually, I believe, reverse on this zone. So I'm going to set an order limit on this zone. And I don't know if I'm going to set an order limit on the 50% of this zone or the whole body. Let me just check. Because these setups are actually tricky. These are tricky because if price built up this liquidity and if it sweeps this liquidity, it happens to me pretty often. It happens to me pretty often that price sweeps the liquidity and it doesn't come up to mitigate the 50% of this block because the liquidity swap will gain enough fuel, which will grant enough fuel to price to reverse just the first step of this block. So what can we do in this scenario? Let me just check if the full body covers the whole zone. If it covers it, I will going to set an order limit on that. Okay, so the 2 pip stop loss actually covers the whole zone to the upside. And here's one more tricky thing. If I set an order limit on the 50% of the candle, and if price won't reverse on this zone, it will go up to the extreme zone right here. So if price won't reverse on this supply zone, on this decisional supply zone, it will go up to the extreme. And as you can see, if I set an order limit on the 50% of this candle, this additional stop loss size here won't cover the whole gap between the extreme and between this decisional. So it doesn't really matter if I set an order limit on the full body or I set an order limit on the 50%, because if price goes up to the extreme, I will be swept out no matter what. It will be swept out regardless. So it doesn't really matter if I set an order limit on the 50% of the candle or the full body. So in this region, I will just set an order limit on the full body because the stop loss perfectly covers the whole zone with additional space, as you can see. So let me just check. We are still waiting for the tap of this zone first. If this zone is being tapped, I'm going to delete this limit. If this zone is being tapped, I'm going to delete this limit. And if this zone is being tapped, I'm going to maybe target this zone. Let me just check how many restore ratio are these, or just the downward demand area. Yeah, that will be the perfect because there's liquidity. So the plan here, if price taps the upper supply zone and takes us into the order, I will delete this long order and target this downward demand area because there's where the liquidity is. I'm targeting the liquidity and the less recent zone below or above the liquidity. And if price steps into this demand zone and takes us into this trade, I'll be targeting this supply zone up here. So that's our plan right here. Let's see what happens. Price is going to collect the liquidity. No, actually no. Okay. We are tagged into the trade. As you can see, price perfectly swapped the lunchtime zone and perfectly swapped the liquidity and actually created a liquidity sweeping week on this 1 minute chart because it swapped the liquidity, tapped into this order block and immediately reversed, as you can see, tapped this block and immediately closed below this zone. So I'm going to delete this zone, delete this zone, delete the orders, and draw a liquidity line right here, set this order block up again, and target this order block for the shorts. Okay, so this is our first target point. Let's see what happens. Okay, it might be go for the extreme. Okay, huge reversal. Okay, perfect reversal so far. Can we set a break even right here? Can we set a break even in this region?
No.
No, not yet.
No.
Why can we?
We're waiting for this region to be broken.
Exactly, perfect, thank you. So we are setting a break even as soon as price breaks below this structural low point, because this was the last structural low point that was leading to a change of break of structure to the upside and liquidity sweep at this region. If price breaks below this structural low point, we'll be able to set our stop loss into break even. But still has a chance to reverse on this demand zone. Price still has a chance to reverse on this demand zone and go up for the extreme because there was no change of character yet on the 1 minute chart. If price changes character to the downside and breaks below this demand zone, I'll be setting a new order limit on the freshly created supply zone because that's our plan here. We just raised the entry right here. This was a risk entry, and we are waiting for a confirmation entry still. So if price breaks below this demand zone, we'll be able to execute the confirmation entry. Let's see what happens. We still have a chance to be swept out from this trade. Okay, reaction on the, okay, reaction. Would it be safer to set a break even at this point? Would you set a break even at this point? Because price was reacting on this demand? I'm asking you again, guys.
I think yes, it's more safer.
Yes, exactly. I'm going to set a break even here. So our break even is in stop loss because price was reacting on demand zone aggressively here, as you can see. So our break even is stop loss. Okay, let's see what happens next. Okay, almost break even. We're still in the trade. Okay, perfect. Oh, okay, perfect. So at this point, we'll be able to set our stop loss into profit. So our stop loss is at this region, at this high point that was leading to a change of character. Let me just, will I mark the stop loss? Let me just change the color to red. Stop loss, red, 16. Okay, on the top, sorry. So this is our stop loss point. We are going to bank profit no matter what. This is maybe 0.3% profit, so it doesn't really relative to us, but we're still in profit, right? Okay, so the change of character has happened. Basically, this is a flip zone because prices react on this zone, as you can see. This was a reaction on this demand zone, and after the reaction on this demand zone, you just created a huge inefficient movement to the downside. So there's a flip zone. Which zone? I want you to draw on my screen. Which zone is the right supply zone in this region? Just draw on my screen, please. Exactly, perfect. Thank you, Kaizen. That will be your right supply zone because the whole inefficient push and the break of this demand zone has started from this supply zone. So I'll be able to set an order limit on the 50% of this candle, or let me just check the 50%. Okay, we can choose. If you'd like to, we can set an order limit on the full body here if price creates liquidity. So basically, if price creates liquidity for this zone, we'll be able to set an order limit on the full body of this zone. But if price doesn't create a liquidity, I will just stick with the 50% entry here. Okay, let's see what happens. We are targeting this zone still. So this is our next target point also. Let's see what happens. Price is still going down, sweeping the liquidity, almost tapped this zone. Reverse before the zone and created liquidity. Okay, there's liquidity. This is actually liquidity, as you can see. Or just swap the liquidity. So we are going to execute, as I said, the full body right here because liquidity was being created. We're still targeting this zone because the tap hasn't happened yet, and price created more liquidity for this zone. Okay. Oh, yeah, that was the news. As you can see, 4 p.m. This was the news. This was the news movement. We weren't paying attention to the news. We forgot it, but we won't forget it during the sessions. Okay, this was the news. So, okay, let's see. Let's reanalyze. If price creates liquidity for this zone, because as you can see, this is a huge structural low point breaking zone. This is a huge structural low point breaking zone. Let me just mark it out. So this supply zone has broke below a structural low point, or just let the liquidity, we don't know yet. If price body breaks below this zone, I will just set an order limit on this zone. Okay, there's not a body. Okay, there's a body break. Okay, we can count this as a body break. As you can see, price has created a break of structure to the downside with a body break here, and this was a structural low point, basically a swing low point, because as you can see, this was our high point, low point. Sorry, no, this was a strong high point because it could break below the demand zone, right? Strong high point, weak low point, because this weak low couldn't break above this last strong high point. And instead of breaking above this strong high point, you just react on this strong high point. And this will be our new strong high because this strong high could break below this last weak low. But the real break of this weak low has started from this candle with a strong, inefficient, aggressive push, as you can see. So we have two options here. I'm going to set an order limit on the 50% of this candle, or the, I don't know, just the whole, if it covers the whole zone, I will just set it on the full body. I mean the full wick. It covers the whole zone. Okay. So we got two options. I will just target this right here, and this trade has been closed actually. Let me just do the stop loss. This did hit TP for 8 risk reward ratio. Perfect. So we got two options here. The first one is to wait for this zone to be tapped and still keep this order here, but still keep this order here. And because we booked 8 risk reward ratio already, we can risk 1% loss here at this movement. So our two options here. If we keep our order here and keep our order here, that's the first option. That's the first scenario. And the second scenario is to delete this order and wait for the liquidity sweep to the upside, because there's still a chance that price will sweep this liquidity to the upside and tap into this zone. We got two options here. I'm going to choose the riskier one because we have already booked 8 risk reward ratio at this trade. So I'm going to set an order limit on both zones. So I'm going to keep an order limit on this zone. I'm going to keep an order limit on this zone. If this zone will be swept, this zone will be tapped and we'll be able to book profit. And this target will be changed too because this target point has been already mitigated. So if this zone will be swept, this zone will be tagged and we'll be able to book profit. If this zone reacts and it tags us in, that's win-win. That's a win-win situation, right? So let's just see what happens. Building up liquidity. Okay. Building up liquidity, more liquidity. As you can see, here's perfect liquidity for this zone. So I believe price won't come up to this liquidity because price has created liquidity for this zone also. So if the liquidity is being swept, this zone will be able to reverse price to the downside, and it won't be needed this liquidity sweep. So we are waiting for the tap of this zone. Almost a tap. Okay, we are tagged in the trade. Perfect. We are in the trade. Strong reaction. I'm going to delete this order. And as you can see, we have this less recent demand zone right here. I will just close this zone the way it is. We have this less recent demand zone right here because price is actually changed character. If you take a closer look, there was a body break to the downside, and this structural high point that was leading to a break of structure, the last break of structure was broken here, and this is a change of character to the upside. The reaction on demand zone, demand change is holding, as you can see. Sorry, break of structure here, demand holding, break of structure here, demand holding, break of structure here, demand holding, question mark. Let's see what happens. Okay, nice. Still a reaction on the demand zone. Still a reaction. Okay. Okay, huge inefficiency. Okay, at this region, let me just play price forward a little bit, and we can set our stop loss into break even. So our stop loss is at break even, right? Because it broke below the structural low point on this one. There's a break, there's a clear break. We can set our stop loss into break even. Okay, what can we see here? We can see that price was reacting on this demand zone right here. Sorry, this demand zone right here several times. It was a reaction here, it was a reaction here. And from this candle, we can see the price has started the inefficient movement to the downside and the actual order flow that was leading to flip and the change of character to the downside. So let's see what else happens. Okay, huge inefficient movements to the downside. TP almost hit. Okay, there will be a TP hit, I believe. Okay, a reversal to the upside. What can we do in this region? What can we do in this region? We can mark this zone out, this first zone out. As you can see, that was causing the huge inefficiency to the downside. But we have to consider this liquidity to the upside too. So what can we do here? We can do the double-sided knife again. We can mark this zone out, and we can mark this extreme zone out. And we can set an order limit on both of these zones. We can set an order limit on both of these zones, on the 50% of this zone, because there's a equilibrium tree, perfect, equilibrium tree. Okay, 50%. And we can set an order limit on this zone also. Because this is the same scenarios as the less recent one. Let me just adjust the zones, because if price sweeps this zone, sweep this downer zone, this one will be tagged and the liquidity will be swept. But if price reverses on this zone, that's a win-win situation for us. And we've already booked 8% here. Our second trade is already in break even. Actually, I will keep it in break even because this is just liquidity and I won't set a stop loss here. because this will be liquidated. But if price reverses on this zone, I will be set my stop loss here. So let's see what happens. So once again, if this trade tags us in, that will be a win-win situation. If this trade hits stop loss, this trade will be tagged and will be in the trade again. So let's see what happens. Okay, this is a stop loss. I'm going to delete this. And let's see what happens next. Okay, perfect liquidity building up. As you can see, here's perfect liquidity. First tap, second tap, and this liquidity is being built up for this zone. But actually, it seems like price was reacting on this zone. Let's see what happens next. I'm still keeping my order here. If price reverses on this zone, on this small candle, and creates a breakout structure here at hits TP, I will delete this order. But as soon as this low is not broken, I will just keep this order here. Okay, we are in the trade. That was fast. Okay, we are in the trade. Okay, we are still in the trade. Almost stop loss. Okay, perfectly going, perfectly going. Oh my God, perfect. So we can set our stop loss above this high point. So the second straight stop loss is above this high point. It's risk-free. I'm going to still keep the risk on this trade, on the third trade, because as soon as this low is not broken, I will just set my stop loss in the original place. But as soon as this low is broken, I will just set my stop loss in the break even. But if price aggressively reacts on this demand zone and aggressively reacts and coming back up from this demand zone, I will just set my this stop loss into break even on the third phase stop loss. So let's see. Okay, there's actually a aggressive reaction. So I'm going to set my stop loss and break even for the third trade. Okay. Okay, liquid. Okay, perfect. Almost hit TP. Almost hit TP. We are not executing any more trades because this session has already ended at this point. So we are just letting our trade runs. I mean, letting our trades run. Okay, reversal before it. I'm going to set my stop loss above this high point. So stop loss is right here. Both of our stop losses are right here. Okay, reaction on that structural high point. Price is reacting on this zone. As you can see, this is also a strong high because, as you can see, let's map our structure out. Strong high, weak low, couldn't break above the strong high. Strong high, weak low, couldn't break above the strong high. Strong high, weak low, broke below the weak low. Then this low couldn't break above the strong high. So this will be a strong high and this will be a weak low. So we are keeping our stop loss above the strong high. Okay, still going. Okay, perfect. Okay, perfect. TP hit for both of the trades. Very nice. And this session has already ended, as you can see. Yeah, this session has already ended. So let's just count the risk rewards for today. First trade was 8 risk reward, right? It was 8. It was 8. It was 8, right, guys?
Yes.
Okay, perfect. Second trade. Second trade is 1 to 10 risk reward ratio. 10.6 risk reward ratio. Third trade was stop loss. So that's -1 risk reward ratio. Fourth trade is, let me just adjust, sorry, let me just adjust this. Fourth trade is exactly 9 risk reward ratio. Fourth trade, 9 risk reward ratio. Overall, 8, 18. Yeah, almost 20 risk reward ratio. Minus the 1. So, okay, let's just keep this 27 risk reward ratio for today at a single New York session with following the pro trend. Because I don't know if you remember, as I told you, the pro trend is still bearish. Every single downside movement will be a pro trend movement. Every single upside movement will be a counter trend movement. You still remember that? So we were following our plan. We were executing your criteria. And as you can see, the scenario that we were talking about, the liquidity sweep and the reversal here and the continuation down to this demand zone has actually happened. It actually happened. We followed our plan, we followed our criteria, And that's happened exactly what we were predicting, what we were planning, right? We followed the criteria at every single trade. We were waiting for liquidity sweeps. We were waiting at nice entry opportunities. So this was a pretty good day overall, right? We can keep going if you'd like to. We can see what happens after the tap of this demand zone, just for curiosity. Guys?
Yep.
Yeah, for sure. Because we had that before. There's a zone on the 15-minute.
Yeah, this is the 15-minute zone. We were waiting for the tap of this zone and for and the whole session, right? So yeah, I will
Right.
just keep it here. This is our today's results. Just a question. Did you actually like this session? Did you learn something new?
Yep. And I have
Great.
and I have questions, but when you're through.
Okay, you'll be able to ask your questions after we finish this. Okay.
Okay, cool.
So I just see what happens. Okay, that could be a liquidity sweep. Let's see. Yeah, there's perfect equal bottoms right here. First bottom, second bottom, price fed the liquidity. I believe this will be a 5-minute liquidity sweep. Yeah, aggressive reaction, change of character. As you can see, there was perfect change of character after the liquidity sweep. This was a liquidity sweeping movement that swept the double bottoms here, change of character here. Change of character has happened from this small candle right here. So in that case, if it wasn't outside of the session, we'd be able to execute a trade here because price has built up liquidity for this zone. As you can see, this could have been a perfect entry criteria, but we are not trading in outside of the New York yield zone, as you may know. So this is not an option for us. We are skipping this trade. Just let's see if it hits the target point actually and the entry point. Okay, let me just try it if it would have kept us in. Yeah, that will be still a tag and we will be in the trade. Reaction, and we will be able to target the upper 4-hour supply zone for swing trades for 1-to-25 risk-reward ratio. Of course, we are not keeping for 1-to-25 risk-reward ratio. We are closing at 1-to-10, 1-to-15, 1-to-5 in a counter trend. But let's just test it for curiosity. I'm going to just fast forward it. Okay, switch to the 5-minute chart because it's actually pretty slow. Just to see if our analysis were good or not. It's running straight up to TP almost. Switch to the 15-minute chart because it's still slow. Okay, TP, perfect. So basically our criteria or plan or overall, every single criteria was good. We did set our criteria, we did set our plan well. We executed our plan, as you can see, tap of this demand zone, change of character on the demand zone. We were waiting for the change of character inside of the session, but it wasn't happening inside of the session. Tap of this zone, change of character here, and execution of the expectation long order flow up to this supply zone. So yeah, if this trade would have still been in the session, in your session, I would have taken it regardless, but we're following our plan, right? We are executing our plan. We are sticking to our plan. We can't execute a trade after New York yield zone has ended. We are sticking to our plan. We've missed the 1-to-25 risk-reward ratio here, but we've already booked 1-to-27 risk-reward ratio at this session. So that's perfectly fine, right? So, okay. Actually, this was a pretty good day. If you get any question, they are very welcome. Let me just hear your questions, guys.
All right, if I may start off, Marcel. All right, so initially we started. Are you hearing me? Just making
Yeah,
sure.
yeah. Go on, mate.
Okay,
I can hear you.
awesome. Okay, cool. So initially we had a plan. We started with a 4-hour. We marked out the zones there. We had that big area at the top, the pink area. We also went to the 15-minute and we had the zone which we just tapped in to give the 25 RR. Now the thing is, and I'm just gonna speak for myself. I don't know if other guys have this. I'm with it. 4-hour zones marked out, looking for a 15-minute chop and a 1-minute chop. But
Yeah.
for this, like today that we reviewed, that was not on. It didn't go to a 15-minute zone. We didn't get we got the chop, but it was really on the 1 minute. So we had the zones which we knew were there.
You're meaning
went
this
to-
zone,
Yeah, right.
but this is a
So-
50-minute zone. This is a 50-minute
Right.
zone.
Right. So at that point, we were looking at, at that 15-minute zone, it was still bullish on the 15-minute, overall bearish on the 4-hour, but it hadn't tapped into the supply of the 4-hour.
Yeah,
So
exactly.
of course so without the tapping into the supply, we are not looking for the 15-minute chop to go bearish. So at that point, we're still bullish on the 15-minute, right? And we're
Right.
looking for it to come into the 15-minute demand and looking for a chop on the 1 minute in order to take that buy trade.
Exactly.
So I'm saying all of this from a question is that since we were in that market structure, which was bullish on the 15,
Yeah.
and we saw where price at the beginning of the session, price was in between the high and low of that market structure on the 15.
Yeah.
When we go to the 1 minute chart, we should look for the zones which have the inefficiency, liquidity sweeps, and those well, in this case, it would have been, we started with a sell from supply. No,
Yeah.
actually we did a buy initially, right? I think we did a buy initially. No, we did a sell. I don't remember what one we did first. basically-
we were aiming for a buy opportunity first.
Me.
Here was the first buy opportunity. We were aiming for
Yeah.
this buy opportunity. But
Right.
as soon as I saw the reaction on this extreme supply, because this was an extreme supply, this supply is on this high point could change character on the 15-minute chart, right? So overall, the
Right.
15-minute order flow has been changed to bearish from bullish. So in this region, the overall 15-minute order flow was bullish. But after the
Right.
high point was printed here and the change of character to
Right.
the 15-minute has happened, and price has actually reversed here and built up liquidity for this demand area. Of course, we were
Right.
looking for demanded trades up to this extreme supply. But as soon as price changed character here, and the change of character happened on the 15-minute chart, perfectly happened on the 15-minute chart, the overall 15-minute order flow has changed into bearish at this region.
Right.
So at this region, the order flow is bearish. The main trend on the 15-minute
Okay.
chart is bearish, but the counter trend on the 1-minute chart is bullish. This is a counter trend movement up to this
Right.
supply. And the overall main order flow down to this demand zone is bearish on the 15-minute
Right.
chart and on the 1-minute chart and the 5-minute chart on every low time frame, right? And that's
Right.
when as price taps this 15-minute zone, and demand takes over control again from supply and
Right.
changes character. So if price steps into this demand zone, that means demand is in control. But if price
Right.
creates a change of character on the 1-minute chart, that means demand is fully in control because price was tapped into a demand zone. Demand took over control from supply partly, but change character on the 1-minute chart, which means it took over control fully from supply. So at this region, after a change of character here and here, demand was fully in control. So just look
Right.
at the order flow, just look at the higher time frame order flow. On the 15-minute chart, as you can see, price is printing highs and lows, highs, lows, highs, lows, highs, lows, highs, lows, lows, highs. And the order flow has turned here to bearish, down to this demand area. The order flow turned to
Okay.
bearish here. That was a change of character right here.
Right.
And the bearish order flow was being continued on the 15-minute chart down to this demand zone. 1-minute change of character,
Okay.
and the bullish order flow is being continued up to this supply zone.
Okay, so for our session, we had a bearish change of structure on the 15-minute chart,
Yeah.
and then we were looking for sells,
Yes. Exactly.
and we sold at the extreme because
We
saw
were
the
looking for
liquidity
sales
building.
at the extreme region, at this region, right? But
Yeah.
we were being able to look for longs, for counter trend opportunities up to this region. So basically,
Right.
price swept the liquidity here. This was a 15-minute change of character, and the liquidity sweep at this peak, as you can see, it swept all of the liquidity, and after the liquidity sweep, it just reversed to the upside. So at this region on the 1-minute chart, okay, let me just clear this. Let me just fully clear this. So the bearish structure, the 15-minute structure, sorry, the 15-minute structure has turned into bearish at this region, at this movement. So the structure on the 15-minute chart is bearish here. But on the 1-minute chart, at this region, the structure has turned into bullish, right?
Right.
Because price change character here on the 1-minute chart. So the 1-minute structure is bullish in this region. But the 15-minute is still bearish because this is the high point. So what's the expectation order flow? The expectation order flow is that price created a change of character here, reaction on a supply that was creating a change of character, continuation of the order flow. This is the 15-minute. This is the 15-minute
Right.
chart. 15-minute, 1 minute. bearish at this region, bearish, change of character, bullish at this region, reaction on supply, bearish at this region, right?
Yeah, I'm with you. The only thing I'm saying is that with the change of structure on the 15-minute, it didn't tap into a 4-hour zone. But even though it didn't tap into the 4-hour zone, it was still valid.
Of course it was.
Okay, with you.
Because
okay,
this was just a clear 15-minute zone. This was just a clear 15-minute zone. It doesn't have to be a 4-hour zone. Maybe the
Okay,
4-hour zone
okay.
was just below this. Maybe there was a 4-hour zone, but price was reacting on a 15-minute zone. And if price reacts on a 15-minute zone, you need to wait for a 1-minute change of character. But if price doesn't give you a 1-minute change of character here and just go straight down to this 4-hour zone, let's say there's a 4-hour zone, you have to wait for a 15-minute change of character inside of this 4-hour zone. But if the 15-minute zone gives you the right entry opportunity, you can execute the trade based on that entry opportunity. In this case, a 1-minute change of character. Okay.
Good. All right, thanks, bro.
All clear now?
Yep, with you.
Perfect.
Thanks.
I'm going to answer 2 more questions. Any more questions, guys? Anyone? Come on, guys. Don't be shy.
Maybe tomorrow while trading, we can ask questions then.
Yeah, of course, you can have questions. So the session was clear. You've got no questions left. It's all clear.
Yeah, this is clear. This is clear as water. Yeah, very
So,
good session.
Was it a
Love
good
it.
session? Did you enjoy the session?
Enjoyed
Yeah.
so much, man. It's
Yes.
2 a.m. at the night. Still enjoying it.
Great, yeah.
It's 2 a.m. at your place.
Yeah.
And you're still here and watching this session, right?
Exactly, with full energy, man.
Yeah, man, that's what it is. Discipline, right? Perfect. So if you got no other questions, guys, that's it for today. I'm going to upload this session to the Telegram channel and see you guys tomorrow with the markups, with the recap video, if I take any trades. So yeah, guys, take care. Have a beautiful night. Have a beautiful evening. And see you guys tomorrow. Take care.
Thank you so much.
Enjoy.
Thank you.
Thanks.
Bye.